hey, 2023 is shaping up to be a pretty turbulent year for your finances. Okay, we're talking about interest rates and hikes going up, inflation, bank collapses could be taking a toll on some people's wallets. So let's get with our expert, John Vandergriff with Blue Ridge Wealth Financial Professionals. Talk a little bit about, okay, this year we're really just through that first quarter of 2023. What has been impacting our money so far?
Well, like we talked about, the most recent is probably the bank failures there with the Silicon Valley Bank and the Signature Bank. And, that shows something that is, I guess, a byproduct of the banking industry, but also shows some things that as individuals we need to pay attention to. The main thing for those listening is just make sure that you don't have more than FDIC insured amounts in your bank accounts. If you have more than that, I'm sure Project Grad Knoxville will appreciate some donations there. But also just make sure that you're aware of those, making sure that you do have maybe several banks if you do want to have that as an option, or other places that you can put that money that's not tied to something where if there's a run on the bank, then that can affect you. So we also have interest rate increases. That has kind of teamed with inflation persisting through the first quarter this year. Inflation numbers came out today and they did go down more than expected. So 5% is the kind of year-over-year inflation number. So we may see interest rates either raise a little bit, stagnate, or maybe even go down at some point this year, but obviously time will tell there. So those are kind of the three main stories of the quarter, and some of that to spill over from 22.
What else should we be aware of, aside from all those things that we know we're keeping track of in our headlines, of course?
So for those retired, one of the things that went into effect this year was Secure Act 2.0. And so really the biggest effect that's happened so far from that, there will be some more that will roll out over the several coming years, is RMDs increased to 73, where they used to be 70.5, then last year they were 72. So 73 is the new age where the government makes you take required distributions out, and they also lessen the penalty if you don't. That doesn't mean you skip it, because it's still pretty severe, but you do want to be aware that if you're on the cusp there, you may have an extra year to defer those retirement accounts and without having to take those distributions out.
All right, and hey, we got a whole lot of 2023 left. What should we look ahead to?
So the big things right now is the debt ceiling crisis. We're still undetermined as far as how that's going to be resolved. Emergency precautions are in place, so we do have until September. So obviously there's a lot of time before that has to be done, and may take all the way up till September. The other thing that's still on the docket is student loan forgiveness. The Supreme Court's still making a decision there. If you do have student loans, we've always been of the opinion to continue to pay those, especially while there's been a rate freeze, because we've had interest rates increase so much. Continuing to pay that and make sure you have room for that in your budget in case that relief doesn't happen the way that it's advertised is always a good thing, just so that you don't get in a bad position financially.
All right, John Vandergriff, thank you so much for being here. We always appreciate it. Now.